about, so we have about 4 or 5 modules that we'll go over today. If at any point, I'll stop at each section to just answer any questions, but if you have any questions, just drop them in the chat and I'll try to keep an eye out for them and answer them as we go. Okay, so perfect. So the different sections we have. So on the first section, we'll go over the big picture. So that's just credit reporting for your business and what that looks like. Second section is the impact of personal credit on your business. The following is business credit reporting. Then we have how lenders evaluate your credit worthiness, followed by credit reporting and business operations. Okay, so the first one, so we're just gonna understand how the personal and business credit reporting landscapes relate to your business. Identify what goes into a personal and business credit scores and like the factoring of what lenders look at during the underwriting phase. Learn how to establish and build strong personal and business credit history. And then understand how lenders and others may use your personal credit information when I'm trying to obtain a loan. And as well as how credit reporting agencies may benefit your business, the leverage of having a strong personal credit and business credit, and then recognize when business credit may become a bigger factor when you don't want to rely so much on personal credit. All right, so just going right into section 1. What are some credit reporting agencies important? Why are credit reporting agencies important to your business? 1, for seeking financing to manage debt and obligations, and then to assess and reduce risk before entering into relationships. So that's a lot of things what lenders look at when they look at the different reporting agencies for both your personal and business side. So credit is just the ability to borrow money or goods based on the promises that you will pay it back. It's important for financial stability and the success of your business. So personal versus business. Your personal is a record of your credit reporting agencies, or your credit reported to consuming credit reporting agencies, while your business record, that's handling debt and financial obligations reported to business credit and business reporting agencies, like D&B, Dun & Bradstreet, which that is something that we'll touch on in, I think, section 3. So the importance of credit for your business, again, is to access financing, acquire manufacture inventory, purchase necessary equipment and materials, and then manage your working capital. Okay, so we're going into section 2, but before I go into section 2, just to go over a little bit on this screen where it says the importance of credit for a business. So as you even starting off, one thing I like to tell when I'm meeting with customers or small business owners of what things that they'll need when they first start off, whether you already had small business loans or you're starting with loans. If it's a startup business, and it's always good to just see what different financial institutions are out there, ask questions about what they need, and that kind of information. Because if it's a startup business, most lenders may want you to have a business plan. It doesn't, and again, I can't speak for all lenders and all financial institutions, but so most lenders, it doesn't have to be anything extravagant. It could just be a business plan that you've typed out on a Word document. When you first start off with small business loans, it's going to heavily require, it's going to heavily depend on your personal credit. So they're going to ask for your 2 years prior tax returns, any balance and income sheets that you may have, year-to-date things for the business. And that's how the beginning of like accessing financing for your loans. And then again, as you establish a loan, then you can always come back and ask for more, and that's how you can acquire more inventory. So once you have one loan established, maybe it's a term loan or just a regular line of credit, as the loan is being paid back, as your working capital is increasing and those such things, then you can just come and ask for more money, whether that be like an inventory, or I'm sorry, an equipment loan, or just a a line of credit, so that way you can utilize that to do projects depending on the setup of your business. Okay. Any questions before I move on to section 2? I don't see any in the chat. Okay, perfect. So section 2 is the impact of personal credit on your business. Okay, so a personal credit, of course, it just tells lenders who you are, how much debt you have, and how long you've had it, how frequently you've applied for credit, how much credit you are using, whether or not you make your payments on time, and then what negative information about you that exists on your credit report. So public records, bankruptcies, foreclosures, and those such things. 3 major credit reporting agencies are Equifax, Experian, and TransUnion. Then some of the things that you'll find on your personal credit is your personal identifying information. So that's going to be your name, social security number, addresses, date of birth, telephone number, employers, and those things. Some credit history examples are going to be your open credit accounts. So those are your revolving lines, which is a credit card, maybe term loans, and that's your auto loans, your mortgages and whatnot. Any closed credit accounts you've had, charged off accounts, collections, and any consumer statements. And then of course your inquiries is just a list of businesses that have reviewed your credit over the past 24 months, and then any public records. Things that don't appear on your credit is your checking and savings balances, income, medical history, purchases made. Your business account information wouldn't show up on your personal credit report, and then race, gender, religion, driving record, and your marital status. So for a personal credit score, that's just a number that helps lenders determine your credit risk. Frequently used are FICO score, Vantage. Many lenders also use their own credit score. So that's always a good question to ask. If you're going for a loan, whether that be personal or business, you can always ask your financial institution what they're going to pull, whether that be Experian, or TransUnion. Some people say they may pull all 3 or they don't know. So it's good to just have all 3 set. Some people will tell you that they only pull TransUnion, but that's a question again, like as you're doing different, inquiring about different loans with different financial institutions, that's always a question I would ask what reporting agency that they use. So FICO score and Vantage score typically range between 300 and 850. So again, this is the breakdown of your credit score. So some people, they might question why their credit score, they have all the said things, why is their credit score not high? And it may be the ratio or the makeup of your credit score is not being utilized correctly. Because past payment history, that makes up 35% of your credit score. Outstanding debt is 30%. How long you've had credit is 15%. New applications and types of credit are 10%. And then Vantage scores a little bit differently. It just does it in terms of like extremely highly, moderately influential, and less influential. So what is a good personal credit score? So high risk borrowers are your poor credit. So that's 300 to 400-ish. Fair is 500 to 6. And then your excellent credit is going to be 650 to 850. And then even then, of course, like with the fair credit, you can still qualify for a business loan if that was something that you were interested with. It might have to start off on the smaller side, and the rate can differ as well. Of course, the better the credit score, typically your rates are a little lower, but there still is options out there. Just because if your credit is not exactly where you want it to be doesn't just mean that you can't apply for any business loans. I think a perfect option is to also, like, while you're trying to expand business and get different business loans to also work on your credit at the same time, do secure credit cards or whatnot. That way, next time you go for more money for your business, then the rates are a little bit better. Okay, keeping up with your personal credit report. You can receive one free personal credit report every 12 months from each of the 3 major credit reporting agencies. A tip I like to give, all 3 are, I mean, you can get them all 3 at the same time, but if you're ever trying to maintain your credit report and make sure everything is accurate, you can pull each one pull Equifax the first quarter, TransUnion the second quarter of the year, Experian the third year. That way you're not pulling them all in the beginning of the year and then maybe in the middle of the year or later on you have to check and then you have to pay for a copy. So that's always a good tip, is just check it throughout the year. Use a checklist to make sure you're reviewing your report in details. And then provide copies. So whenever you're disputing or doing anything, or you're working with any of the credit reporting agencies, provide copies, never originals, of documentation supporting your claims. Send disputes to credit reporting agencies and your creditors. Request new credit reports to verify that the correction has been made. Okay, so the Fair Credit Reporting Act and Fair Accurate Credit Transaction Act, that just defines regulations for personal credit reporting, which includes the purpose for which lenders and other businesses can obtain your credit report. When you need to get permission for others, of course, to see your credit report, it's your rights to see your credit report and rights to dispute information on your credit report that you judge to be incorrect. So it's there to protect the consumers. Some best practices for building a strong personal credit, again, is just to maintain healthy credit, pay your loans and other bills on time, keep outstanding and revolving debt balances low. So your debt to income ratio, keep that on the lower side. It differs again with each lender and financial institution, but I would say like a general rule is like most lenders want to see your debt to income ratio 42% or lower. Pay off outstanding collections accounts and other debts. Avoid negative events that could result in public records, such as bankruptcies or foreclosures. Comparison shop for major loans within 45-day windows. Maintain a mixed credit accounts. Avoid closing older accounts in good standing. And then just to touch on the bankruptcy again, I know sometimes I've even had some business customers who maybe have had bankruptcies in the past. It's not a discouraged, so you can still do business loans. I always just recommend, if you've ever had a bankruptcy, just immediately start on rebuilding your credit. Most lenders like to see a 4-year time span. So when you file bankruptcy, typically after 4 years, the effect starts to wear off. But by then, that's when most creditors wants to see like more new credit established. So having credit cards or different lines of credits that they are seeing that you're using and you're paying back on time. So again, bankruptcies don't end anything. I would just say recommend like get started on them after you file if you file bankruptcy, or if you've had to, try to go ahead and start repairing your credit as soon as possible. So that way you can still have options for loans later down the line. When personal credit history is important, again, to access financing and or trade credit to grow a business. For personally guaranteeing and co-signing on a business loan, and then establishing a new business. Okay, so there was a question for personal credit. Do you recommend Credit Karma? So I always tell people when I talk about Credit Karma is never accurate. Typically, I've seen it go both ways. So we've run credit before on loans, and I've seen it where Credit Karma is telling them, like, for instance, you may have a 750, and then we pull credit and it's showing you have a 700. But I've also seen it be the opposite way. People may have thought their credit score was on Credit Karma and may have said it was 600, and then we pull it and it's higher. So I would say it can go both ways, but it's never accurate. I always just recommend people to use, if they use Karma, just use it as a monitoring type of thing. Like, you can go on there and check and make sure there's no, maybe like lines of credit that don't look like anything you've applied for. Just use it as to make sure there's no nothing being reported inaccurate. But I will always lean to using TransUnion, Experian, or Equifax, just getting your credit report from there. As well as I always recommend security freezes. So you have to do it through each credit bureau, so TransUnion, Equifax, and Experian. But putting freezes on your credit report, it's free. It's not a fee that you're paying, but that also ensures that your credit is not being ran. So fraud is has high, like it has risen a lot. So that's just always one thing that you can keep in mind, is to put your security freeze on. That way, like, there's nobody trying to open up credit cards or do loans or bank accounts or anything in your name. And if you ever do need to go apply for any loans, all you have to do is call one of those 3 credit reporting agencies and just have them do a 24-hour lift, and that'll take the freeze off so you can apply for the credit you're using, and then the freeze can go back on. One of the questions was, if a derogatory info appears on an authorized user credit report, can you dispute that as not being yours? And correct me if I am wrong, if this is the question you're asking. If you have a credit card and you add an authorized user to one of your credit cards, if you can dispute that. That is honestly something I do not know, but what I'm going to do is, okay, so for that question, I'm not 100% sure on if that's something that you can dispute or not. And I don't want to tell you guys anything that I'm not sure of. So one thing that I will do, that I often do, if anybody asks me a question that I'm not too sure of, I always just make a copy of it and get the answer for you. So any questions that you guys, like I said, if you have any questions that I don't answer, I'll clarify with those, and then I'll send the answers to Bill, and he can just maybe put it in a spreadsheet of frequently asked questions that you guys can go back and look at. So as a new business owner, is there any way to build business credit without relying on your personal credit? There isn't. So whenever you're a new business, they all, like, you're kind of, most lenders and financial institutions, they're always going to look at your personal credit because you don't have any business or credit established. So they have to look at that at least for like the first 2 years. So again, for new businesses, startup businesses, they want to see your tax returns, like your prior year or 2 tax returns, and any balance and income sheets for your business. So if you don't have those, they have to rely on your personal credit. And I would say after the 2-year mark, your personal credit will always be a factor, but after 2 years, your business is kind of established, then you can rely more heavily on your business, because then you have tax returns in your business name and such. But for the beginning, most financial institutions are lenders that you come across that you will inquire about business loans. They're going to rely on your personal credit until that business is established. And again, a new business is anything 2 years is up to 2 years. So after 2 years, you kind of don't have the term for a new business. By then, you're kind of an established business owner. Some of the best, do I know any of the best financial institutions for startup businesses? I always recommend going to different banks. Again, like I work at Lake City Bank, but I still always recommend customers to inquire about other banks. So I always say, form a question like a list of questions that you can call different financial institutions. And because you want to find, although financial institutions are here to help you, you also want to find something that's going to be the best for you, that's going to be the best outcome. You want to, something that's going to be a good rate, payments that are fit for you. So one thing I always recommend, like I said, is go talk to different different financial institutions, sit down with somebody, ask them some of the things that you will need. Again, when I sit down with a customer, I'll give them a list of things that we kind of need to get the ball going. Again, a business plan, personal financial statement. You need the application done. We need tax returns. The business established, so we'll need the letters of EIN, your articles of incorporation. If you don't have that yet, that's fine. I've had businesses who kind of just wanted to see if they would qualify for something first. So they haven't established a business, but that's one thing that needs to be done before we can close the loan. Depending on the financial institution, they also have different products. So you have your term loans and you have your revolving lines of credit. So again, you want to ask your lender what kind of products that they have, what do they recommend, because you also want your lender to understand the business that you're in. Because if you're in, let's say, a construction, well, for you, that might be best for you to have a line of credit, because then you're doing different jobs. So while you're waiting to get paid for a job, you can also, you can draw from your line of credit, that revolving line of credit, and then to complete the job. And when the job is paid, the job is finished and you're paid, you can pay down the line. So again, asking lenders, your lender needs to know what product is going to be best for you and understanding like your business. So again, just ask different questions, ask what their rates are. Again, I always recommend local banks only because you can go into a bank and you can be able to sit down and talk to somebody. Your brick and mortar type banks versus a bank where there's not a building where you're located. I mean, it's still, you still can do it, but it's just nice to be able to go into a branch and be able to sit down and talk to somebody and know who you're speaking to and be able to get the things that you need done. Citibank, how about Citibank? Do they offer credit card for newly started businesses? I believe they do. For the most part, I believe all financial institutions and different credit reporting our credit card companies offer credit cards for businesses. Again, that's just something that I would just look into, because you also want to see what their rates are, their interest rates are. You have a lot of different credit card companies that have different perks. Some of them may have a 0% interest rate for 18 billing cycles, which that's, if you can get 0% for that long, that's good, versus you paying 23 to 24% right off the bat. So I would just look into Citibank, and then again, any other banks that offer credit cards. We do offer business credit cards, and see what the terms and conditions are, see what kind of rates they may have, any specials they're running. Again, because if you can get a credit card for an introductory rate, or a business credit card that has rewards, especially if you are buying different product or materials, again, using that credit card at that store, that way you are also earning some money back to put in your business. In business credit, what is a good or poor credit? So that is actually where we're going to go into in section 3 is business credit reporting. So I'm just going to jump right into that slide so we can go in on business. What is a good business score and a poor score? Oops, sorry. Okay. So what are business credit reports? They're a risk assessment tool used to evaluate the risk of lending, extending trade, credit, or contracting with a business. Personal versus business credit reports. Your personal credit, again, that's just personal identifying information, your credit history, inquiries, public record information, Whereas your business credit, that is your business identifying information, your business credit history, your business background, registration, financial information. It'll list your vendors and different things like that, and your public record information as well. So the major players in credit reporting are going to be your DNB, your Dun and Bradstreet, Equifax, and Experian business. DNB focuses on how your business interacts with vendors and suppliers, your trade credit performance. Your DNB, that also lists that'll list your score as well. And it's different than the personal credit. So how we were saying, like your personal credit, 600s to, I believe it was 7 is like fair. Your 750 to anything higher is excellent. Whereas your business credit, it's a range. So there's like scoring systems, 60, 80, 90s and whatnot. And that tells you your credit score for that. And then the Dun and Bradstreet, again, how I said it interacts with vendors and suppliers. So it will show if you have a business and you have contracted, let's say Wildman's or a shred service or such, like anything like that, that'll show on there. It'll show if you have any accounts elsewhere at any banks, if you have different loans or depository accounts at other financial institutions, that'll show on your Dun and Bradstreet as well. Your Equifax, that focuses on how your business has managed business lines and credit and loans. Experian, that focuses on credit information from both lenders and business vendors. What information does business credit reports contain? Again, business information. So that's going to be your business name or your any doing business as. So if you have any DBAs, that's going to show on your business information. Your business address, phone numbers, and your web presence is going to show your DUNS number. For the credit history examples, that'll be your companies that have granted you credit. That'll show up there along with payment data from suppliers and creditors and your risk scores and ratings. Business background registration and financial information examples are your registration and incorporation data, the way your business is structured and the ownership of it, history of your business, your corporate financial reports, your affiliations. It's going to show contracts, grants, loans, and debarments from federal governments. And it's also going to show any self-reporting data that you have listed as well. And then for the public records, it'll show any lawsuits or liens or judgments that you have against the business, and any business registration. So your state, city, and county courts. And then any filings of bankruptcies that you've had previously from your business. Okay, so many consumer lending agencies such as the FCRA and the FACTA do not apply to businesses. So that's more, that only really applies to your personal, so consumer credit report. Your business credit, however, they do have reporting agencies that they still have procedures in place that they have to follow. So they have to provide access to reports, managing disputes, and determine how long information will stay on your business credit report. Okay, so business credit scores. Your personal credit score, that's created by consumer credit reporting agencies and credit scoring companies. There's many types available, and they generally have similar ranges and measure similar factors. Whereas your business credit scores, it's created by business credit reporting agencies and credit scoring companies. Many types available, and they have a wide variety of scoring ranges and rating system that emphasize different factors. And then once when I wrap up with the last section, I'll pull up a template of a Dun and Bradstreet, so that way you can also see for the question where it was is business credit, what is it, a good or bad or poor score? So I'll pull up a template so that way you can kind of see like what shows up on a DNB and how the different factors and the rating scores affect it. Checking your business credit report. checking your business credit report, you want to make sure that information is accurate as well, because if there's any information that's not accurate, just like you can dispute on your personal, you can also dispute on the business side. You can create an account with the Dun and Bradstreet to access your business credit report and update any of the basics information. Some businesses use credit monitoring services to receive and check business credit scores. And again, the creating an account on Dun and Bradstreet, that is a good tool. Again, like that's another credit reporting agency for businesses. And again, you can update things there as well. If you have like new vendors that you're working with, suppliers, maybe that's not showing up, you can list that on your Dun and Bradstreet. You can make sure that they're reporting. You can actually make sure that they're reporting to things like that as well. So that way it's showing up on your business credit. Why should you establish business credit? Again, lenders that help determine approval and in terms of financing for suppliers and shipping, and decides whether they will grant a deferral of payment for goods and services. Customers, it helps to determine if your company is legal entity and if it's in good status. For insurance companies, it helps to determine the price of your insurance policies. And then any procurement officers, it helps evaluate the ability to execute government contracts. Okay, so for establishing business credit, some of the things that you should have, again, is your EIN, so your employer identification number, your business credit report, business lenders reporting to your credit information. So again, you want to get a copy for the EIN. You want to get a copy of your EIN if you don't have, or if you don't already have one, and then make sure you keep that in a safe place. Business credit report, verify whether you already have one. Again, signing up for the DMV and creating an account with them as well will help. And then for business lenders reporting, you want to ask your lenders and suppliers to report information about you, self-report, and financial and credit data as feasible too. So again, when you're sitting down with different lenders and pursuing different loan options, ask them what do they report to, because if you're going to get a business loan, if you're going to get a loan, you want to make sure it's going to your business credit to ensure that it's continuing to help that and make that go up as well. Okay, some best practices for strong business credit. That is maintain healthy credit, pay your loans, bills, and taxes on time. Make sure your business is visible so that you are structured and for customers as well. Maintain good relationship with suppliers and vendors. Separate your personal and business finances, and then monitor your personal and business credit histories as well. Okay, so how, I think this might be our last section, how lenders evaluate your credit worthiness. What are some simple vendors one could utilize, for example? So vendors that you can use for your business are vendors that you would put on your DMB. So, okay. So for instance, and again, it depends what kind of business you have, or like the business frame you're in, because I mean, for some examples for like vendors, again, if you're, let's say you're manufacturing, or you have different shippers that different companies that you're using for shipment, then you want to list, yes, for easily established accounts, you want to list all your suppliers. So if you have a let me see, if you have let's say you have a construction business and you have different suppliers, you want to, any suppliers that you're using, you want to make sure that's on your Dun and Bradstreet. You want to make sure they're also reporting to it, and your different vendors that you have, that they're also reporting to it, because then that'll help you as well. So for instance, too, if I was like a small business and I had an office space, any of my suppliers that maybe bring mats in, like for instance, if I had Wildmans and they bring our floor mats and paper towels and things of that, you want to use that for, you want to make sure that they're showing any um, vendors that you have that maybe deliver printer paper or office supplies. You want to make sure that is reporting to it as well. So anything that you use for your business to run your business, those are different types of things that you can have listed on your Dun& Bradstreet. Okay. The current landscape for business credit reporting. So for small businesses, lenders and businesses that use credit reports and report to credit reporting agencies, consumer and business credit reporting agencies, companies that provide credit reporting, analytics, and scores. And then putting it all together. So when you are going through the phase of doing different loans, you have your traditional loan underwriting, which is your 5 C's. So that's your capacity, your collateral, your credit history, your conditions, and your characters. So that's typically what most lenders will look at. They're going to look at the capacity that you have to pay down a loan. So they will never, most lenders, they're not going to lend to you if your capacity is over. They want to make sure that you're able to fund the loan and you're able to pay down the loan. Then your collateral as well. Sometimes for a loan, you can be applying for a loan and there may be a collateral shortfall. So for small businesses, we often have to go the SBA route, which SBA they guarantee the loan. So say you're doing a loan and I come back and say, is there anything that we have a little collateral shortfall? You can put, and then for collateral as well, you can put, and that'll be things that you'll list on your personal financial statement if you were applying for a loan. So those would be things like, if it's the business, you can always put any business equipment that you have. Say you are in construction. If you have different equipment, pieces of equipment, you can list that as collateral. Your home, different, like anything that you have that you list as collateral. Those are things that are going to help fund the loan. Again, if there is a shortfall, there are other ways that you can utilize to help guarantee your loan. Your credit history, and then your conditions and character. And that's for when you're new and growing a business, that non-traditional credit data, that's a lot where that falls into, is the conditions and character. What is non-traditional data? So typically what is non-traditional data? Typically non-loan data that may still help lenders predict risk. Personal credit reporting examples, so that includes utilities, telephone services, rental data. Business credit reporting examples, online business reviews, your shipment volume, your e-commerce trade, and your merchant account transactions. Different lenders have different priorities. Again, so some factors when underwriting is your capacity, collateral, credit history, conditions and characters. Providing startup loans considers all of the 5 C's, and it emphasizes a lot on your personal credit, again, and collateral that you can use to help fund the loan. Lender B, so this is the second one. So providing working capital, they consider all of the 5 C's to some degree, but then it emphasizes business credit, whereas non-traditional credit data and conditions. Just in a few best practices is know your credit, know your lender, know your rights. Again, go to different lenders and sit down and ask questions. Ask questions on their business accounts, because again, you want your loan, you want to have a loan there too, but again, I always recommend looking at the business accounts. As a small business, a lot of it is like you want to save money. You're starting up. It's not like there's a ton of money to work with in the beginning. There isn't. So you want to make sure even your business account, is my business account a free account? Again, saving money as much as possible. There are a lot of banks who have free accounts for businesses and different perks for small businesses to help them start up. And again, know your different rights that you have when it comes to lending and businesses and your credit report, and the things that you can add to your credit report, and make sure that people are reporting to it as well. For collateral, does it need to be in your personal name or can it be in the business? It can be in both. And then again, it can be in both, but then you're also not obligated to list everything as collateral. So if some people are fine with putting their home up as collateral, and again, that'll just put a lien on your home in the event that, and again, some people are fine with that, some people are not. So you don't ever have to put up for any collateral if it's something that you are not wanting to, but it can be in the personal or it can be in the business name. I've seen both be done. Do they ever report business credit card loans, et cetera, on your personal credit? No. So when your business is set up, so it's just going to report to your business again. So here's your business, whether that's in an LLC or again, the structure of your business, but it should not report to your personal credit. That is a question that I probably would look into a CPA ask for that. But again, when you, and I'm not sure who the loan is through, but I would, if they have given you, you should have hopefully received some documentation that shows that the loan is paid off and it's paid to zero, because that, once you have that loan paid to zero, unless there's any other loans as well. So sometimes some businesses they might pay off one loan and there still may be maybe a secondary loan. But if everything is paid off and you have the zero balance, and then any letters that they've sent you afterwards that it was paid off, that should take the lien off. So I would definitely try to reach out to them, or again, I would recommend a CPA as well. Um, credit card. So so for are medical bills allowed to negatively affect your credit score? I believe it depends on what lender you're working to and what type of things you're applying for, whether that be a mortgage, a credit card. And again, I think all finance lenders are differently. I think again, I'm not too sure on that, but I believe that it still affects it. There's just a percentage again, but that is something that I would double check. Again, and then too, for the second question, as far as credit cards, so even with credit cards, that was something I'll touch in on too. If you have like a credit card and let's say you have a high balance on that, um, doing balance transfers are always good options too. So again, looking at what different credit cards are out there, because you may be able to score a credit card that has 0%. Right now we have a credit card 0% for 18 billing cycles on balance transfers, as well as purchases. So depending on what credit card company you're looking into, a lender you're looking into, they may have different promotional periods to where, say you have a credit card and it's a higher balance and you're paying on it and the interest rate is pretty high, you can do a balance transfer, open up a new credit card and pay it down that way as well. And then keeping cards open, again, that's always something that you want to look into many different factors. I've seen a lot of times where consumers will have closed accounts on their credit report. So it's not anything too terrible, but again, just having that mix of ratio is also good too. So you just want to weigh out your options of what that credit card would do if you make it disappear. Again, sometimes I always recommend, if you can, depending on the rate, because you also want to make sure that it's a good product for you. But if everything looks good, you can always keep that card open and just use it for small things, for gas or supplies or whatnot, and just pay it down as well. So, how can I get a business credit card to purchase inventory? I'm a new business, have money in the business checking account, pay any credit card balances. So that sometimes is another, I understand, is a tricky thing for new businesses getting credit cards. But it still is very much an option. I have a handful of customers who are pretty still in the first 2-year mark and they have been approved for credit cards. You can Again, I think it's for business credit cards, it's just a matter of, again, looking at different financial institutions, looking at your lenders. Um, when you go to places, do you guys are small business friendly? Do you have any credit cards that you think that can be approved for small businesses? So we have a lot of business credit cards, and I've worked with a lot of small businesses who are fairly new and they have been approved for credit, for business credit cards. Again, it's going to rely on some of your credit. So when they do apply for credit cards, again, they want to make sure that the business is established. So making sure that your business is visible on the Secretary of State. You want to make sure you have your EIN. One thing that I've also seen recently, and this can depend on the different credit card company as well, but I had a customer who was turned down on a credit card because they weren't turned down, but they just needed to get that fixed. But the thing that was holding them up from getting approved is because they were using a virtual address. So I know sometimes small businesses will use virtual addresses as their business location, and that could be something that could hinder you from getting a credit card. So that may be something that you want to look into, because a lot of times when businesses get denied for credit cards, sometimes it's not the business itself getting denied because of credit or things. Maybe they needed some verification or whatnot. And if you get them the verification, you can be approved for it. Like, again, like I said, with my customer, they had a virtual address. So they just had to get everything changed with the Secretary of State, have a actually brick and mortar address, and then they were able to get approved for their credit card. So I also would recommend you guys checking into anything if you're going to a bank, or maybe if you're doing a credit card company, you can always call their customer service. But if you're at a bank, your representative should be able to call on your behalf and look into why you didn't get approved, and maybe help get some things corrected for you. So some different ways to build business credit. It Business credit, typically it can take a little longer than your personal credit. So your personal credit, you can build that very easily, whereas business does take a little bit longer. But again, some of those things that can help is a credit card. Again, you've been in business for 10 years, so actually a credit card and even a loan, that kind of gives you a leg up because you've been in business for 10 years versus the 2-year startup period. So that kind of helps, because that's also sometimes where you see people not getting approved for loans is because of it not being, especially credit cards, is it being under the 2-year mark. Again, that's not, I still have a lot of customers who have got approved under that. But I would recommend doing credit cards. And again, if you're paying for everything with cash, that's always, again, a good thing, is because you can get your credit card, pay for business expenses, business materials, whatever you're using to pay cash for, use your credit card, and then just take that cash and pay it off. Same with a term loan or maybe a revolving line of credit, depending on the setup of your business and what you do. You can always do a small business loan, and again, do term loans or a revolving line of credit, and use that to also build business credit. I think for those are two, especially the business credit card, that's or at least two things that can start to help build your credit. Again, that credit card is going to help regardless, whether you're on the personal side trying to build your credit, since you're relying heavily on personal credit in the beginning, or whether you're established business. I think your credit card is always just a simple way to get started because you're already paying for cash for everything. So if you can build credit by having a credit card and just paying everything off, and then you're also more insured that way. So whereas if you're paying with things with cash, if you have a credit card, you're insured. If things happen, you get disputed, things like that, you should be able to get refunded. So if you've had some like credit setbacks and you're working on rebuilding your credit, there's just, again, like one thing we touched on is the bankruptcy. So if you've had bankruptcy in the past, again, one of those things is just like after you file bankruptcy, like again, it's going to be hard to get approved for certain things, but don't wait to start back establishing your credit, because again, like I said, it starts to fade away after that 4-year time frame. And then by then, lenders will see that you've established credit and they're more likely to lend to you. And then as well as like, there's been some talk with your lender. If there's been some setbacks along the lines of like some late payments or missing payments or not being able to, or going default on things, I think one thing that you can always do is just like be in contact with your lender, whoever you work with, wherever bank you're at, because you can just go into your office and because at the end of the day, financial institutions have, they don't want the loans to go in default, because then we lose out on money. So most financial institutions, they're going to work with you regardless. So if there's ever been issues on making payments or late payments or need to reschedule a payment, I see more times often than not that they'll work with you on making sure you can get your loans paid and get caught up and whatnot. What if the virtual address is a brick and mortar location? I believe you should be fine if it's actual brick and mortar location. I think the issue he ran into was it wasn't a brick and mortar location. And that was something that was new for me too. I wasn't aware that that could be an issue with you getting denied for a loan, is the way if they can't, verify your location, verify signers or things like that. So now that I know that, that's just something that I always recommend. That could be an issue why you didn't get approved for different loans and not. But if it's a brick and mortar address location, you should be fine. So it is free to get your credit score through the business through the DMV. Now, I'm not 100% sure, but there may be, again, with different reporting agencies where at some point you have to pay a fee, or if there's different things that you want to add in on that you might have to, that it may charge you. But again, I not too sure at some point if there will be fees involved. So you can apply for business credit, again, as if you're repairing your personal credit, you can always apply for business credit, even while you're repairing your personal credit. You just want to make sure, again, there's some that you've repaired it a little bit in your personal credit is somewhat fair. It doesn't have to be excellent, but I would say at least somewhat fair, because then that'll help applying for business credit. And then some things that are needed to purchase a vehicle in your business name. So it depends on lender to lender. Again, that's why I always say, like, ask your lenders what do they need, what does that entail? Because if it was a loan here, then that's going to be a small business loan. So then you would, again, we would need article of incorporation, your EIN, and business tax returns. If there's no business tax returns, then we'll need the personal ones for 2 years, and any your balance sheet, your AGRs, if you have things like that. Again, but for the starting point, if you just have your personal financial statements filled out, an application, and then your tax returns, that's typically enough to get started on purchase a vehicle in a business name or a business loan in general. You may have your lender come back and need more information as you go through the loan, but for the most part, that should start the loan for you.
We're at 103, Mia.
I'm sorry?
I said we're at 103.
Okay. What I'll do too is, because I thought about the DMV, I would need to find that. So what I'll do is I'll find a template for what a DMV looks like, so that way you guys can see that and see your score and see the different things that show up. So I'll find one that just doesn't have any customer information on it, and I can send that over to you, Bill, and you can just send that with the group. And then I'll also copy down the questions and answer those again and go in depth and share that with you, and then you can forward that as well. And if there's any other questions that come up, if you guys have any question on any banking needs, business loans, feel free to grab my information from Bill, and you could touch base with me that way as well.
Does that conclude what we're going to cover today, Mia?
Yep, that was the last slide. I'll stop sharing and hand it over.
Okay, great. Thank you all for joining. Mia, thank you again for presenting how to provide credit for your business. So thank the rest of you for joining. And you know, many lenders require a business plan to make a loan. If that's the case, you run into that, please work with your local SCORE office to get assistance for that. So thanks so much for being here.